1120, 1120S, K1, 940. Which of these am I supposed to file again? According to the IRS Taxpayer Advocate Service, an average small business spends about 82 hours on tax compliance every year. And the penalties for filing the wrong forms, they can run into the thousands of dollars. But here's the thing. Most tax headaches can be prevented with just one simple thing, knowing which forms actually apply to your specific business. Welcome back. I'm John Thompson, founder of JCT Tax Solutions. As a business owner who went to school for accounting and recently became an enrolled agent, I still had a lot of confusion trying to figure out what entity type was right for my new business and what forms I'd need to file with the IRS. That's exactly why I created this guide, to cut through the confusion and give you exactly what you need to know about business tax forms based on your entity type. Whether you're a solo freelancer, running an LLC with partners, or operating a corporation, by the end of this video, you'll understand which specific forms apply to your business structure, when each form needs to be filed, how these forms work together in real-world scenarios, and the most common mistakes to avoid. No accounting jargon, no unnecessary complexity, just clear, actionable information that could save you time, stress, and maybe even some money. Let's get started. Quick note, this video is being released in June of 2025, and the tax rules are changing all the time. The information in this video is general in nature and has not been customized for your specific scenario. I highly recommend checking in with your tax advisor to evaluate your specific situation before making any big decisions. And if you need a tax advisor, you can visit my website at jct.tax to schedule a consultation. Before we talk about specific forms, let's clarify something important. Your business structure determines which tax forms you'll need to file. The IRS treats each type of business differently, which means different paperwork requirements and potentially different tax rates. Let's break down the most common business structures and their associated tax forms. First up, sole proprietorships. This is the simplest business structure and the default if you're running a one-person business without any formal entity formation. As a sole proprietor, your business income and expenses get reported directly on your personal tax return using Schedule C. This form calculates your business profit or loss, which then flows into your 1040. You'll also need Schedule SE to pay self-employment tax. Think of it this way. In a traditional job, both you and your employer pay Social Security and Medicare taxes. As a sole proprietor, you're both the employer and the employee, so Schedule SE makes sure that both halves get paid. The filing deadline is the same as your personal return, typically April 15th. Now let's talk about partnerships. If you're in business with one or more people and haven't formed a corporation, you're likely operating as a partnership for tax purposes. Partnerships file Form 1065, which is what we call an information return. The partnership itself doesn't pay taxes. Instead, it reports how much money it made and how those profits or losses are divided among the partners. Each partner then receives a Schedule K1 showing their share of income deductions and credits, which they'll report on their personal tax returns. Partnership returns are typically due March 15th for calendar year businesses. That's a month earlier than personal returns, which then gives partners time to receive their K1s before filing their own taxes. S corporations are a popular choice for many small businesses because of their potential tax advantages. Like partnerships, S corporations file an information return, Form 1120S, and they don't pay taxes at the corporate level. Instead, shareholders receive K1s showing their share of income and deductions. If you're both an owner and an employee of your S corporation, you'll need to pay yourself a reasonable salary, which means dealing with payroll taxes too. S corporation returns are due on March 15th for calendar year businesses, again a month earlier than personal returns to give owners time to receive their K1s before filing their own taxes. C corporations are different because they do pay taxes at the corporate level. C corporations file Form 1120 to report income and calculate tax liability. One thing to be aware of is the potential for double taxation. The corporation pays taxes on its profits, and then the shareholders pay taxes again on any dividends they receive. C corporation returns are typically due on April 15th for calendar year businesses. Now let's talk about LLCs, or limited liability corporations, which often cause confusion when it comes to taxes. Here's something many people don't realize. An LLC isn't actually a tax classification in the eyes of the IRS. By default, a single-member LLC is treated like a sole proprietorship, and a multi-member LLC is treated like a partnership. However, LLCs can elect to be taxed as an S corporation or a C corporation by filing the appropriate forms. This flexibility is one reason LLCs are popular, but it also means you need to make strategic decisions about how your LLC will be taxed. This is actually one of the more important tax decisions you'll make as an LLC owner. The right choice depends on your specific situation, your income levels, and your business goals. It's definitely worth consulting with a tax professional before making this election. If your business has employees, including you in some cases, you'll need to deal with employment tax forms. These include Form 941 for quarterly reporting of income tax, Social Security, and Medicare withholdings, W-2 forms for each employee showing wages and withholdings, and Form W-3 to summarize all of the W-2s that you've issued. Most of these are due on January 31st following the tax year, but Form 941 is filed quarterly. Now let's talk about information returns, which report payments your business makes to others. The most common is Form 1099 NEC, which stands for Non-Employee Compensation. You'll need to issue these to any independent contractor that you pay $600 or more to during the year. There's also Form 1099 MISC or MISC for certain other payments, and 1099-K, which payment processors use to report transactions. Most of these forms need to be provided to recipients by January 31st. On the flip side, your business might receive some of these forms from clients or financial institutions. Remember, you're responsible for reporting all income, whether you receive a form for it or not. Estimated tax payments. One more important thing to understand, the IRS operates on a pay-as-you-go system. For most business owners, this means making estimated tax payments throughout the year using Form 1040-ES for individuals or Form 1120-W for corporations. These payments are typically due on April 15th, June 15th, September 15th, and then January 15th of the following year. Missing these payments or underpaying significantly can result in penalties, so they're important to keep track of. Now, we've focused on federal tax forms today, but don't forget that your state likely has its own requirements for income tax returns, sales tax returns, withholding taxes, and unemployment insurance. These requirements apply not just to the state where you're located, but potentially to states where you do business as well. Before we wrap up, let me share some practical tips that will make tax season much less stressful. Keep accurate records year-round. Good bookkeeping is the foundation of stress-free tax filing. Consider using accounting software to track income and expenses. Maintain separate business accounts. Mixing business and personal finances just creates headaches. Remember your deadlines. Missing them can result in penalties. And save digital copies of all filed forms and supporting documentation. I know tax forms can seem overwhelming, but breaking them down by entity type and function makes the process more manageable. At JCT Tax Solutions, we help small business owners navigate these requirements every day. We understand you'd rather focus on running your business than dealing with tax paperwork. If you'd like some personalized guidance for your specific situation, we're happy to help. You can schedule a consultation on our website at jct.tax. If you found this video helpful, please like, subscribe, and share it with other business owners who might benefit. And drop any questions you have in the comments. Thanks for watching. We'll see you next time.